All right. So while we wait for others to join us, we'd like to interact with some other persons that are here. Nwa Daddy, Gabriel Asuko, you know, you're all welcome to today's section. I would like to know, can anybody tell us where we stopped the last time? By the way, this is Forex Foundation 101 by Traders Room, and this is the sixth edition or sixth session of this training. So we have handled this training from session 1, 2, 3, 4, 5. This is the sixth section, and this likely going to be the last session for this particular series and training. So we are going to conclude and wrap up this training today with this section. So moving forward, we will get to know what is the next step forward for those that are coming newly to the community and those are already trading with the community. What are the things that you have to do to scale up your career, scale up your trading and become more successful and more profitable trading with us. So we're going to start from where we stopped. We've treated all of these topics. Okay, so we've done price actions, we've done some market structures, we've done some market orders, we've done a lot, order type. We've done up to trading criteria. I think the last session we had, we treated trading criteria. So, but we're going to start from day once again. Yeah, I think we did trading plan, exactly. So we did trading plan. So we stopped at trading plan. So let's talk about some other things from there. So use 1 minute, please. You can write on the, if you're on the WhatsApp group, please write on the WhatsApp group so that people can get notification that we are live. If you are on the discussion group on Telegram, please write on the discussion group that we are live. Let others join. They don't have to miss this training. This is very important. We're going to share some very important updates from here. So we're going to start with we're going to go back a little bit more to trading plan and get to trading criteria, because that is the last topic, risk management, and then we move forward from there. So let's start from here, because this is part of where we stop. These are things you need to ask yourself personally. Okay. So we've traded this already. What are you watching out for in trading criteria? Like I mentioned, trading trend line, support and resistance, long wick, consolidation trade. So if you're just joining us newly, note that you have to go back and watch these videos. We had a recording of these videos where we traded these topics, each one of them. We're not going back there today. So I'm trying to look for where we stop. Discover the trend. We talk about you have to watch out for the trend. Trade with the institutional traders and market makers, market flow, supply and demand levels, where we talk about all of these things. Okay, so we've already gone all this way. So let's start from here. Let's start from checklist, confirmation checklist. So I mentioned some of the things before, which is they are all in your trading criteria. So your trading criteria is going to be what makes up your confirmation checklist. So if you don't have a trading criteria where you understand your strategy, because your strategy is going to be formed by your trading criteria, where you're going to understand price action. And from then, you make that to form a confluence that forms your confirmation checklist. And what I mean by confirmation checklist is, what are the things you're looking out for in the market? What are the things you want to see price played out before you take an action? How many of these rows are you going to see before you engage in either buy or sell in the market? So that's what means confirmation checklist. So you hear some of us when we are trading, I will share chat or share analysis. We will be like, oh, we are waiting for confirmation. We are waiting for price action. No confirmation, no execution, no engagement. Yeah, we have the focus, because focus is we are able to, see the general bias of the market. Maybe we are able to define the trend. After defining the trend, general bias, and look at the correlations with the XY, which is dollar index, and the other pairs, gold and other indices and economic factors, and we are able to create the bias for the week. Like, okay, this market is going to be bullish for this week. Dollar is going to be falling for this week. Either way is going to be based on economic factor, or it's going to be based on technical and all of that. So when we create our bias, and looking at some of the criteria we want to look at in the market, we still have to wait for confirmation. And when we talk about confirmation, it boils down to what one of the major important things, which is like us having entry strategy and exit strategy. So your confirmation checklist is going to make up your entry strategy, because if you don't have an entry strategy, how would you even have an entry strategy when you don't know when to enter the market, and when you don't even know what is a confirmation checklist for you? So the things you have to take notes before you take a trade is what we've made by confirmation checklist. So it's usually more of 1 or 2 rows that you have to create by yourself, and that way you're able to have an entry strategy and also have an exit strategy. So it's not really far from the confirmation checklist. Is not really far from what you have as your trading criteria, because your trading criteria, which forms your strategy, is also going to be part of your trading confluences, and it's going to also be part of your confirmation checklist. So let me mention an example of one of those confirmation checklists. One of them is, some people trade until they have a sweep of liquidity. Either liquidity has to be taken in one side before they can have entry. So that is the confirmation checklist. Some people have pullbacks as confirmation checklist, right? Price has moved in one direction. It does not give me pullback. It does not give me an entry. Some people have consolidation as pay entry. So I'm waiting for price to, consolidate, showing weaknesses or showing the fact that it's waiting for a continuation. It's forming a continuation pattern. So if I don't see a continuation pattern, I don't want to take the trade, because or one thing or the other. The pullback is, I don't want to engage, because it can use me and do pullback. If you ever been in that position where you're trading, the moment you enter your entry, bam, that is when the market is retracing. Why? Because you didn't have retracement or pullback as one of your confirmation checklists. So the market use you and do. You're not wrong with your bias, but in worst case scenario, you've loaded your risks. Maybe you decided to take multiple positions, or you decided to be greedy that particular day, and it uses you and do pullback. And where your stop loss levels are, or where the market can be counter trend level, where you can have this confirmation of, oh, this market is really turning around in opposite side, is way too far that you can't hold with your balance. Before you get there, you're being liquidated. So confirmation checklist is going to make you be able to minimize loss and minimize exposure, mitigate some of these things in your trading. So put this as one of the things that you would need to ask yourself while you're trading, right? Okay, so how will you monitor your trades? We'll talk about this before. You want to use stop orders, and all of that. What will you do with the money you make in from trading? This is very important questions. Why do we have some of these questions asked at the end of this training? It's because you have to understand trading as a business. And if you're not careful with the business, with the business of trading, you're not going to be able to make use of the opportunity that you have now, because you always think that the opportunity you have now, you're always going to have them later. No, it's not. Doesn't work like that. So if you're in a position where you are making money in trading, you have to have a plan. You know why? Because you're trading in a market that is high volatile, high liquid, such that things happen very fast. You get. So what are the plans you're going to do with your money? We talk about diversification in the market. Are you going to go into crypto investments, buy token and hold? Are you going to go into proprietary trading as a backup plan on your trading? Are you going to go into copy trading? Are you going to go into asset management? Those are the few windows of opportunity that you as a person can diversify in the industry. So you need to have plan on the money that you want to make in the market. I understand that it all depends on how much you're actually making, before you can start having a plan. But start with the little and small, even if you want to save, so that in this market, capital is paramount. If you don't have capital, it's not easy to get money from people, hard-earned money. So when you're fortunate to really make money from the market, you have to have a plan about the money you're making in the trading market. Understand that this session is also a coaching session. So we only just teach you how to trade. We want you to understand how to manage money, how to have financial goals and financial plan to be able to upscale your trading career. Because I will tell you, when you have much money in trading, you will trade like a baby. Like, you would trade without being afraid. You would trade without worrying. You would trade with peace of mind. In fact, you wouldn't have need to get money from anybody or investors. You only chase your career because you understand how to use money and make money work for you. You understand that this market doesn't even need you to hawk anything. You don't have to sell anything to anybody. You don't have to sell a course. You don't have to sell signal. If you notice, we don't sell signal. If you notice, we don't sell courses. If you notice, we don't pay for even our premium services. We don't really bother who want to subscribe or not, unless that person just want attention. I will tell you, attention is not something that you got for free. If you want attention that much, then you have to pay for it, because that's me giving you my time, right? Which is worth for it. So you can be on your own and become very successful trading by yourself. So that is the reason why we teach the strategy, we teach the setup, we teach you how to behave as a trader. Because if you're not a disciplined trader, you won't be able to succeed. I said it again. If you're not disciplined and tell yourself the truth that this market you're in, it's some places where people come and lose money. So you should not apply wisdom and be careful. Then you're not going to, the chances of you making it might be very slim. So let's move forward. How will you keep your records of trading? Very important. How do you keep record of trading? If you check us, we have track records, we take screenshots, and we can tell you what happened, scenarios that are happened in the market, because we keep trading records. We can tell you what happened during the last election of US election, because of what? We deal with data. Something like that's going to happen again. Maybe 4 years from now, you'll be able to see the market play back the same scenario that played back a few years ago, right? Now that they are trade war between China, the US, the Canada, all the tariff and all of those stuff happening, is disturbing the market. It's disturbing the market a lot. And so as a trader, you keep track of records, you keep track of price action, scenarios, both, pay attention to some of these things. You understand the behavioral way of the market when stuff like this comes up again. Because when you come into trading, believe me, there's no going back. No matter how much maybe you've lost, no matter how much it is, when you come to real trading and you understand how to make money from real markets, you will not like to do any other thing. I'm telling you the truth. You will not want to, because you just wake up and you start making money. You're sleeping and you start making money. And to be honest, there's little secret that if you go and break the bank and want to do trading alone. You get. So until you get there, you need to master yourself and do your checklisting and keep your track record, because you'll be able to know exactly how the market scenarios plays out. How will you monitor your trade? We talked about that before. I think, hold on. Yeah. All of this we've traded before. What is your next strategy? I think we've done this before. Okay, so moving forward, trading plans, we've discussed this. Yeah, we've discussed this. This is part of your trading strategy. So let's talk about demo and live trading. I'm going to place some emphasis on this. Now, I encourage people, if you are starting out, please make sure you at least traded your demo account for like 2 weeks to 1 month. Make sure you understand, trade all the lot sizes ever in this market. Use your demo account. Trade micro lots, trade standard lots, trade 10 standard lots, trade 100 standard lots. I want you to see volatility in action. I want you to see risks in action as well. So trade all the market orders, trade multiple pays, trade gold, trade indices. Try to understand the behavior of some of these markets, right? So demo accounts is where you're not losing anything. So when I see traders that says, oh, I didn't have live account to trade, I say, what happens to your demo account? Because you cannot be a trader even if you don't have capital to trade. Trade demo accounts, because you cannot be out of the market. If you're out of the market, you're not going to improve, because the market is dynamic. Why is it dynamic? Some things don't repeat today. The scenario that repeats today may not actually repeat tomorrow, but then the market has kept that record like a pattern. It will come back, but you don't really know when. So the market is always evolving, different scenarios, different patterns, different reactions, and all of that. So if you cannot totally really master it because it's dynamic, but you need enough scenarios, enough information, which is data, on how the market behaves for you to be able to know how to predict, if not predicting, how to forecast tomorrow's price action, right? So as when you're starting out, you need demo account, and demo account is for free. Signing up with a broker is for free. Verification is for free, right? So when I see people complain about trading, without, they don't get involved in day trading with their demo accounts, even free signal, they don't want to do. They just want to sleep and wake up and start having money on live accounts. And immediately they join live account, they want to start making money that day. You have to deal with the fact that you need patience, you need time, you need practice. There's nothing that you want to do that you don't practice that you're going to succeed in it. And to be honest, I'm not really that impressed with the students, and especially with the people who are learning. You know why? For once, I'm not really seeing you guys post your trading results, the trade you took by yourself with your demo account, the money you made. You guys are not sharing screenshots. It's more like you guys are shy. Don't be afraid that or be shy you're trading demo. I still trade demo till today. Why do I trade demo? Because I test other strategies. I test other scenarios. Sometimes days I don't want to trade. I want to have the feel that I'm not losing out in the market. If the setup is not worth risking on live accounts, I'll risk it on demo accounts, because I want to be satisfied that I take an action when I saw the opportunity in the market. If I'm sharing my screenshots of entry, exit, you too should be sharing like yours. That gives you, the fact that at least helps you to put your record out there. People can correct you, or you can see, your history can be there to see improvement and all of that. There's a big need, especially for a community like this. We can get to recognize you that you're doing well at the point where we have opportunity of maybe funding or doing something with the trader in here, supporting any trader. We're not going to go out there and start looking for somebody. It's the people that are active in the community that we know that they are active, that we could say, they would say, oh, how do we get funding? How do we get trading account? How do we support? How do we do this or that? We'll look at you and say, look at your activities and want to do that with you. Or you have a deal, So that is the way to be able to work with us effectively. Live trading accounts. Yes, we talked about this the last time where we said you need a minimum of $20 to fund your trading account. Yes, it's not really ideal that you trade with $20, as to tell you the truth, but you can start out with $20. Today, I want to encourage you, if you can do up to $100 on your trading account, it's going to be very helpful to you. And when you do up to $100, don't want to flip the $100. Start, trade one position at a time and trade 0.01 and try to make at least $1 to $2 in a day. You understand what it means making $1 in a day? That's 1% of your investment or your capital. If you do $2, that's 2%. If you do $5, that's 5%. I mean, there's no business that you carry 100,000 naira, or that will give you probably 5,000 naira daily. I mean, it's not. Without you hustling, like maybe you are in the sun, you're going around, you're talking to that person, you're doing marketing, you have to sell and do a lot of bunch of things before you could even come back with returns and all of that. So appreciate what the market gives to you. If the market gives you on $1, understand that if you were to be trading a huge fund, that 1% will be a lot of money. Understand, appreciate that $5. Now that dollar is like 1,500, $10 possibly is going to be around maybe 15,000 plus. Appreciate that money. Okay, so plan on how you're going to get yourself funding. Plan on how you're going to stay profitable trading your capital. Protect your capital with all your life. That doesn't mean that you should be scared. Just make sure that you're taking the reasonable risks required for that trading, and you are good enough to be able to take losses when losses happen. Okay, so the difference between the demo and the live account is just one does not have emotion, one has emotion. In one way or the other, losing money comes with pain, it comes with frustration, it comes with a lot that's gonna make you feel low self-esteem. It's gonna affect you in a bunch of different ways. Pains of losing life money, but that is the only way we survive here in the market. You accept losses and move on. You take the losses. The most important thing is learning what causes that losses and try not to repeat that mistakes. Be conscious about how you lose that money, the mistake you made. It could be you were impatient to wait for the trade. It could be that you're always late and coming to take a trade. It could be that you don't even do analysis. It could be that you are too scared. You deal with that. So becoming a trader is a full-time job, like a full-time career. So the good thing is it's going to pay you. That's what I can say. Okay, so risks no more than 1 to 3% of the total account on currency pairs. Okay, as long as this might be a very difficult thing to adapt. You know why it might be a very difficult thing to adapt? It's because of the capital size. So how do you tell somebody that is trading $20 to risk 1% to 3% in a total of his account? How do you tell somebody that is trading $100, to risk 1% to 3%? It's a difficult thing to do. You know why? Because you're gonna feel that you're not making enough profit, and you're not taking enough risks to make enough profit. But if you understand what this means, is it's simply telling you that trading needs money. It needs people with volume, people with like maybe $10,000 up. So if you risk 1%, you're possibly risking around maybe $100 per trade, and to $1,000, which is 10%, right? That's going to make sense. But you understand that if you master trading skill, I tell people money is everywhere, and these days we have pro firm everywhere. That if you master the skill, you only need to save off money and buy one proprietary trading account, and probably buy 10K account. You have enough trading margin there. Give yourself a time, 1 month, 2 months, 3 months, you become successful at it. You make your first withdrawal, maybe $1,000. You put $500 back in your trading account, which is live. You continue trading your proprietary trading account. You make more money there. You put in your live account. You know why? Because proprietary trading account is another man's business. In most cases, they're not that reliable because they have hidden rules, or you can breach any of the rules. They have rights to everything. So then you fall back into your live trading accounts. So there's a way to raise capital in trading. Mutual fundings, proprietary tradings, your fund, your trading capital is trading by. You raise this. I don't encourage collecting money from somebody, but I tell you there are ways you can raise money. Like community like we are, we fund traders, and we will do that eventually. But you have to master the skill set first, and then you start looking at money. If you're only thinking of how you can get capital and you don't think about the risks, people borrow money and blow. People borrow money and lose, and they get themselves into multiple allegations and troubles, which make trading looks very risky and also look like scam. Like people with little amount of money are the most people that lose in trading most more, and people that take crazy risks with a little amounts of money. Yeah, you see stories of where people really succeed in flipping $100, 200. You're not supposed to be in that game. That is not your game for now. Your game for now is how do you make consistent profit, you know, because you don't have $100 to risk that you want to go and flip. If you go to flipping and you lose it once, how do you survive? You're not there yet, you know, where people take those kind of crazy risks. But understand that all these opportunities are there. So um, try as much as possible to get your account up to $100 and above. If you stay on $200, that's going to help you a lot. It's not easy to have that kind of money in this economy to some persons, but you can work through it, you know, and know that the sacrifice that you're going to make to get there. And when you get there, you don't have to mess it up. And one of the things is for you to prepare on how you can manage your funds profitable. Now, I'm saying this because we have given you all series of trainings before now and all of that. So this session is to, you know, prepare you for something bigger, which is trading itself. All this English that we are speaking is not the thing. It's the practical thing that we're going to be talking about. So, for example, here you have deposited $1,000 in your account and you want to trade Europe USD. How much should you risk? 1% is going to be $10 on Europe USD. 2% is going to be $20 on. 3% is going to be $30. So you decide your risk appetite. Do you really want to lose $10? Do you really? Because when we say risk, it means you're willing to lose that kind of amount. You really want to lose $30, right? So if you do that, that's going to help you stay on the course. What does that mean is that when you see your account floating $10, you know you're still in your risk parameter. You're still in your risk appetite. You're not going to be shivering or take some necessary risk because you have already allocate your risk to that particular trading pair. You know, so you have $30 risk and you'll be good. If you're good in your risk to reward ratio, maybe you're trading like 1:1. You know that if you reach 30, you're gonna get 30, or if you do 1:2, if you reach 30, you're gonna get 30 more, or which is 60, and all of that. So this is what you need to start practicing as a professional trader. And we have this table where we allocate some form of risk. All right, guys. Sorry that I was disconnected. Um, I didn't know that my battery was running down and my phone just shut down. Let me see how to reconnect my laptop back, my screen back. So give me a minute, please. All right. So welcome back, guys. So I was talking about yeah, this is the risk table. We're just trying to show you the risk portion when you're doing risk management in trading, looking at the different accounts balances, and risks the accounts but on here percent per trade. What do you have here? You're risking $400. If you want to convert $400 in Nigeria currency, right now it should be almost like 600,000 or so, right? And that's a lot of money. 600,000 per trade for trading $20,000. So what that means is you're gonna have trade one trade, and you're gonna have this is 10% risk. This other one is 10% risk. If now risk 10%, 10% of $20,000 is what? It's $2,000, and $2,000 is about maybe it's 2 point something if I don't make a mistake. So, and that's a lot of money. So you get to understand the risk exposure of 1%, 2% when you have more money in your trading account. You get. So when you start trading something like proprietary trading accounts, you understand why proprietary trading account will tell you maximum drawdown limit is 10%. Minimum daily drawdown limit is 5%. So if you're not practicing this, it becomes very very, very tough for you to, match into that risk parameters you get. So you can take a look at these calculations and just see that, oh, it makes sense when they say trade with risks of 1%, 2%, but it really makes sense when you have enough capital in your account. So what should you do as a trader? You're trained to become profitable. After trading to become profitable, the next thing is for you to know how to scale your capital, how to get funding. But you're not going to go about looking at how you can get funding, get investors, or get a deal, or get a proprietary trading, or get funded by your community when you don't know how to manage proper risk. You don't take risk trading into consideration. So this is very, very important. You can take a screenshot of this and just go and look at it for yourself and see how that could help you and all of that. So risk per trade. One important thing, let me say this, one important thing you should take out from this risk management of a thing is if you're risking 1%, take it for example that you're risking 1% of your accounts. How many trades will it take you to lose your entire volume or to lose your entire capital? If you trade, each trade you're taking, you're risking 1%. Each trade you're taking, you're risking 1%. Can somebody tell me from the comment section, or maybe just tell me, lift your hands up. I'm going to open the microphone for you to speak. How many trades is going to take you after losing streak? How many will it take you to lose entire account? Nobody is there to do the calculation. Okay, let's talk about your win rates, because there's nothing 100% in trading. You cannot have 100% 100% strategy and win rate or accuracy in trading. It's only when you're very comfortable in trading, you master your trading strategy, that you can get up to like 85 to 90%. So one way or another you have losses. But then people are trading with 50% accuracy. Right? What I mean is 50% edge in the market. That means if they take 100 trades, they are sure themselves know out of 100 trades they're going to lose 50, and they're going to win 50. But what is the difference there? The difference there is how much they are risking and how much they are winning. How much they're losing and how much they get when they are winning is the difference that makes them stay profitable in the trading. So if they reach 1% in trading, and the 50 times of the out of 100 trades, 50 of them is losing, they understand that if they also win 50%, they are not just winning and gaining 1%, they are gaining at least 2 to 3%. So what that is it's going to cover up on the loss that they make previously, and it's going to give them something on top of their money. So that makes it the net profit. That's why we don't really look at a good or bad trader by one trade or two trades. We look at your net profit. We look at your net profit. A net profit at the month, your net profit at the year. That's when you're going to say, oh, this year I really make money, or this year I really make losses, because day trading are not the same. Your day-to-day trading are not the same. Your week may be rough week. This week you lose money. The next week you make money that makes cover up everything that you've lost. So take note of your risk up parameters and your risk exposure, please, when you're trading. I'm saying this because after now, most of you are going to live trading, right? So if you're just joining us this week, maybe from Facebook, from wherever it is, on WhatsApp, note that this is the number 6 session of this training. So you have to go back to the recordings that we had before now to learn the very basic. Everyone after here is graduating from here to becoming traders. Remember, what that means is you already have a very solid foundation in trading, and you understand the risk involvement in trading. You understand how to manage your risk properly. You understand the industry, the platforms to use. You understand what to trade, what not to trade, and all of that. So when we talk on the Traders Room community, we know that we are not talking to people who are floating. So if you graduate from Forex Foundation, that should be giving you a very good foundation inside basic understanding of what Forex market is all about, right? So how a correct stop loss for the type of trade is taken, you want to take correct stop loss. If you're scalping in few minutes, scalpers, you should know that your stop loss should be around 10 pips. 1 to 10 pips, you should know, because you're not looking at the long-term bias in the market. Intraday, few hours, use 10 to 40 pips. If you're trading during the intraday time frame, don't go and do 10 pips stop loss when the market bias is just trading the market bias from the daily time frame. You're going to use 10 pips. Use 10 pips. What that simply means that you will stop out at the middle, because in most trading pay, their expansion or their trading volume or pips accumulative in a week is usually around 100, 40, 100, 80 to 100 pips in a day, right? So you look at this very well. Your day trading, 1 to 2 days, give your trade open position 20 pips, 80 pips, risk exposure. So this risk exposure now is going to help you to know what lot size to use to stay on the trading account without being liquidated. How far the market can go against you is what we are talking about now, right? Before you know that you're being wrong in that trading. Swing trading, which is one day plus a week, or over weekends, you have 80 to 250 pips. Position trading, you want to keep your trade for 1 year and all of that, several months. You need to have at least 200 pips, 600 pips as per risk. That gives you room for the price action to come against you, go in your direction, do whatever, because you're looking at the long-term trading plan and all of that. So take notes of this. It's going to help you to know if you have been placing your stop loss very wrongly and all of that. So calculate your risk position size, each trade and all of that. The good news is MT5 does all of this now. MT5, once you place your stop level, it's going to show you the pips you're accumulating. It's going to show you the monetary value you're getting. So you don't even need to go to risk calculator. So once you place your stop level based on your market strategy, entry model and exit model, MT5 is going to show how much you're risking there. And if your risk is too much, then you can decide to, mitigate those risks and looking at that. But that doesn't stop you to go into trade calculator and calculator entry and exit, possibly to be able to know that this is it. So I guess we have come to the end of this section by being able to handle all of the topics that covers the basic, the market structure, forms of trading, trading criteria, checklists, all the methodologies, the forms of trading, types of trading, strategy. Of course, we deal with that as well. Entry, exit, and whatever you could mention, vocabularies. We did that as well. So congratulations to every and single one of you that have successfully participate in this Forex Foundation. This year, we started a couple of weeks ago, and we've been consistent to this point, creating a solid trading background and foundation for beginners. This is for beginners to know how they can come into the industry, because it's always an entry point. So Forex Foundation is always an entry point to anybody that wants to start out. If you skip this process, it means you're not serious, one, and it means you have a long way to go, because you will struggle when you come to traders room and you don't know what you are doing there. You start asking some kind questions. Some people no can answer you, because we don't have time to deal with that. We want you to, we created this content for you to come through, learn all of the process. We have other videos for you, to learn all of this process. Then you come into traders room to trade as a trader. The signal that we'll provide there is to help you understand markets, help you, in one or two ways to support your trade activities, right? Because we want you to become independent traders. If we're looking for investors, we know what to do. We're not looking for people to give us money. We're looking for people who want to take trading as a career. They make decision of their own. They own the decision they make in trading. What that means is they become independent of their own decision. So if I'm not there, it doesn't mean that you wouldn't be able to trade. If I'm not there, it means you can continue trading. Tomorrow now, I decided not to be a trader again. I've made so much money. I decided to invest in crypto and be doing sports markets or do stock markets, and I'm not, maybe I start trading as a position trader, which I'm trading like one trade in a week or one trade in a month. Some traders in this country, they're doing that. You won't see my signals every time to trade with. How are you going to do? Because now I have more money, I have more capital to take higher risks, and just once in a week and all of that. I want to spend more time with myself and family. It means that you're going to start afresh. You're going to start from the bottom again. So the best time now is to invest in learning, following the instruction, because I want you to become independent. If you are good as I am, and then you can own your own community as well. You have people you want to train, or you bring the people into the community. We give you opportunity to train them. You get, so we are networking, so that tomorrow now you know that we started from somewhere. This community that is just about maybe 300 persons and less, we're putting in work. We're going to reach out to many persons. It will become big sometime. So congratulations to all of you, and to the new person that is joining. Please, the series is on the YouTube. The YouTube is not monetized. We're not making money from it. We just put in that content there because that's the only channel you can go have a long video and you study it. And let me tell you what to do. Go through them twice. Have a jotter, have a notepad, and every week trade with us on the community traders room. After 2 weeks of trading your demo accounts, you can reach out to any of the admin or support. They will help you create a live account. They'll help you start up with minimum trading capital funding, and you start live trading to experience the emotion attached to live money and demo money before you can ever invested a lot of money into it. So when you lose $1 and you know the pains of losing $1, or the pains of seeing your accounts from $20 is going down to $15, and you're not panicking, you're not feeling that frustration. It means you're getting to master that this trading is not just about making money. There's risks attached to it. Unlike every other business, you see instant results. So if you make mistake, you're paying that mistake with your money. There's always a penalty for everything you get. I'm telling you because you guys are now officially traders. Let me say that. So what next after this course? What next after the Forex Foundation? The next thing is for you to study trading strategy. So we'll be moving on into trading strategy. We'll be teaching more on technical analysis. That reminds me, I promised you guys I was going to drop 1 or 2 ebook for you to get started. So today I'm going to drop an ebook for trend line trading. So you have to understand how trend line works in the market. Why do people draw trend lines? Why do people draw support and resistance? Trend line on its own is a trading strategy, but you need to understand, just like when you go to university, you do borrow courses sometimes. You do English, you do mathematics, you do biology, you do physics for business administration that you're doing. They borrow those courses. You do mass communication because when you go into labor markets, you meet people on all walks of life, and you need to understand at least their register, understand the language they speak. So you don't have to be dumb and just because you want to be an engineer, you don't know how to speak English. How will you communicate with your contractors and all of that? You need to know how to write a comprehensive and business what do they call it? There's a name they give it to it. Correspondence. You need to know how to prepare business correspondence to relate. So you study all those English and all of that, letter writing, essay writing, just to make sure that you are well equipped. So the idea is to equip you to become better. So you have to learn all the price action strategy. That is when you're able to know how each tools are used and how they are not supposed to be used, so that you can add all of these as trading confluences. You're not going to solely trade trend lines alone. You're not going to solely trade moving average indicators. You're not going to only trade price patterns. So because of this, you have to know how it works. How do you determine retracement? What tools? You have to learn how to use Fibonacci, right? We use all of that put together. So at the end of the day, you now find 1 or 2 tools that are most effective for you to use as a trader. So we are going to be doing some live trainings. It's going to be communicated and announced when we'll be teaching some of you how we trade, basically, without booking you so much things. We'll go straight to the point and teach you how we pick a certain trade, how we analyze a certain market, what we're looking at for, and the strategy we're actually trading with. What is the concept behind that strategy? How do we look at the market and all of that? So guys, that's what we're going to do starting from next month. To be precise, should be from next month. We'll start having those sessions so that we give other people time to go to the Forex Foundation and also learn from the trading activity. Some of you already know how to use MT4, MT5 to take trades. So you will trade with the signals and also see how to, trade your demo accounts with us, looking at the markets in a neutral form and see what happens. So congratulations to everyone. So at the end of this training today, please, we would like you guys to drop your review. There's a campaign on Facebook that is going on. We would like you to drop a new campaign, actually. We'd like you to drop your comments, review on what our Traders Room have offered services to you guys. So that is a way to support us out there and let people see that we are actually doing a very great work. If actually we are, we want your honest opinion, review, I mean. So after now, that's the only way we want you to support us. We will drop the link and we'll ask you to go and drop your comments on that campaign. And like usually we do, we'll pick 1 or 2, 3 persons at the end of the week to reward as cash prize. It's the nature of appreciating our members in the community. Then alongside next month, before next month, so plan your fundings. We'll look at to do a top-up cash on traders that are going to fund their trading accounts from $100 upward. So if you're planning to fund your accounts, make it up to like $100. We will decide how much we would like to top up for the traders. It could be 10%. At least if you do 10%, if you're funding like $20, sorry, if you're funding like $100, we do top up for you like 10%. That's $10. And if you convert $10 to Naira, that should be more like 17,000 or so or more. That is just to, make you be comfortable in taking risks. I mean, your trading capital, at least you know that you have something on top of it. You could do 20%, which is $20, and we might have criteria to just support some of those and all of that. And for new traders that also haven't done funding before, if we see that you are committed into trading and you don't have trading capital, or maybe you haven't done funding before, depending on how your activities has been in the community, we can reach out to you. It's not you that are going to reach out to us. We'll know you and we'll find you. And we'll probably might decide to know how to support you in one way or other, either with minimum trading capital or support you in one way to kickstart your trading with us. So that is the plan that we have for the community. And bit by bit, we will complete this plan. First phase has been done for the year. The first quarter of the year, we've already concluded our Forex Foundation training. And we're going to move into some mentorship programs so with this strategy and do community meetups, and start making the real money. So everyone that's joined us this year, by the end of the year, you should know your way around trading. You should be able to trade on your own. You should be able to have a capital, know how to even get capital. You get. So that is the goal that we are in. So far, I would like to take questions before we can call it a night. Guys, let's have a question. If you have questions on the comment or open the microphone, please ask question, please. Let's get question. Anyone with question, please? Anyone with question, please? Are you guys there?
Yes, we are here.
All right, that's very good. That's very good. Okay. So it seems there's no question for now. So if you have question after now, please, the comment section is open. Discussion group is open. The WhatsApp group is open. You can write your questions, ask how we can support and how we can get you started. Ask about the trainings, ask about the ebook, remind us whatever we talk about. Tomorrow we'll start trading again. So Signal is going to be dropped. If you're not in the Signal group, we have the VIP Signal group, but it's only for those who have funded accounts. If you don't have a funding account, we cannot add you there, but you always get some of the signals on the free channels and this discussion group and on the free channel as well. So thank you guys very much for being a part of the training today. I really, really appreciate. We have come to the close of this training and the section and series.
Good evening, sir.
Forward to our next training and our seminars, workshops coming up soon and all of that before the end of the year. This thing is done. So thank you. Talk to you at that time.
Good evening. Thank you.
El Madi, so you can write your questions on the group. We gave time for questions, but we're not saying anything. We have already closed for today. So